You've bought a stock, and now you're at a crossroads. Hold on for future gains or cash out while you're ahead. Discover the secret to making the right decision and ensuring your investment success. Watch on to find out how to navigate this crucial decision point in your investing journey. Welcome to our channel, where we tackle one of the most daunting questions every investor faces. Should I sell my stock or keep holding? Today, we'll walk you through two common scenarios that investors often encounter. Whether your stock has been flatlining for years or experiencing exponential growth, understanding the nuances of when to sell or hold is critical. So, stay tuned as we break down the factors you need to consider when making this pivotal decision. In this video, we'll explore two key scenarios. First, when your stock remains flat for years, and second, when your stock has experienced consistent growth. We'll discuss critical questions to ask yourself and provide insights into how these scenarios can impact your decision to sell or hold. Additionally, we'll highlight the top signals that every investor should watch out for, including changes in company fundamentals and portfolio balance, to help you make the best choice for your investment strategy. Investing in the stock market can be a rewarding journey, but it comes with its own set of challenges. One of the most critical decisions an investor can face is determining when to sell a stock. This decision can significantly impact your long-term financial success. Let's delve into two common scenarios that investors might find themselves in, as well as the signals that could indicate it's time to sell. Scenario 1. You've been holding a stock for 3, 5, or even 10 years, and its performance has been flat. It's not going downhill, but it's not climbing either. Here's how you can evaluate what to do next. Ask yourself, has the business grown in terms of revenue, profits, and innovation? A stagnant business might be a flag that its stock is also not likely to soar. Also, consider opportunity costs. Could your investment perform better elsewhere, such as in an appreciating ETF? Lastly, if the stock provides consistent dividends, it might still hold value as a stable income source. If growth is absent and better possibilities exist, shifting your investment could be the smarter move. But hold on if the long-term business prospects seem solid and dividends keep flowing. Scenario 2. Now, imagine a more exciting situation where your stock has been growing at a rate of 10% or more each year. This is usually a great accomplishment for any investor, but the question arises, do you continue holding, or is it time to lock in some gains? Consider whether the company's core story hasn't changed, and it's consistently innovating and expanding. If so, the upward trend might continue. Yet caution is warranted if the stock appears overvalued or constitutes a significant portion of your portfolio. Sure, reaping profits is tempting, especially if valuations are inflated or to diversify the investment risk. Keep in mind, retaining a stake is still advisable if fundamentals are strong without an unmanageable portfolio imbalance. Additional indicators for selling. Beyond these scenarios, several key signs warrant consideration when deciding whether to sell your stock. If the business has undergone fundamental changes, like leadership issues, outdated products, or shrinking market share, reevaluating your position might be necessary. Reaching a predetermined target price or witnessing an imbalance in your portfolio can also be cues to sell. Additionally, if personal interest wanes or you lose confidence in the investment and would not choose to reinvest today, it may be wise to disinvest. Lastly, if life circumstances require cash and you've made a profit, selling is not merely acceptable. It is practical as long as it's not spurred by short-term market volatility. In closing, there is no universal formula for when to sell a stock, but a useful rule of thumb is to let the initial reason for purchasing guide your decision. Changes in that rationale may signify it's time to part ways. Remaining invested in a solid company over the long haul is truly a potent strategy for wealth generation, but having the foresight to exit when circumstances shift is equally paramount. Remember these guiding principles and leverage them as you navigate your investment strategies. Let's recap the main points. If your stock has been flatlining and the company isn't growing, it might be time to consider selling. For stocks that have grown significantly, evaluate if they're overvalued or dominating your portfolio. Remember, changes in company fundamentals, achieving your price target, portfolio imbalances, and personal needs are all valid reasons to sell. Ultimately, if the reason you bought the stock no longer holds true, it might be time to move on. Now that you have a better understanding of when to sell or hold a stock, we want to hear from you. Have you ever faced a challenging decision about selling a stock? What factors were most important in your decision-making process? Share your stories and insights in the comments below, and don't forget to like and subscribe for more investment strategies and tips.